Welcome to Daily Drive for Wednesday, July 15th, 2026. I'm Kellen Walker in Las Vegas. Today on the show, United States and Mexican officials will meet the week of July 20th in Mexico City as automakers and suppliers push for a quick end to USMCA negotiations. GM is betting on a diverse lineup to shield any sharp changes in consumer preferences. Volvo weighs a return to mid-size vehicles with a pair of EVs. Plus, Infiniti's Eric Ledieu offered insight into the launch of the QX65.
The retailers really appreciated the simplicity of the lineup. Easy to order, easy to stock, easy to promote.
Let's run through all the news you need to know to keep up in the auto industry. Top U.S. and Mexican officials will meet next week to discuss the future of North American trade. The focus will likely be on automotive rules of origin and tariff rates, and could have a major impact on the future of manufacturing in the region. The meeting comes 3 weeks after the Trump administration said it would not renew the United States-Mexico-Canada agreement. Therefore, there will be annual reviews of the agreement until 2036, when the deal will expire, unless it is extended in the meantime. Automakers and suppliers are pushing for a quick end to negotiations in order to reduce uncertainty and uphold North America's regional competitiveness. General Motors is betting on a diverse lineup to carry it through the next 5 years and insulate it from consumer preference changes. The automaker is planning new Buick and Chevrolet sedans as it seeks a share in a truck-saturated market. To cope with affordability concerns, executives have touted 6 Chevrolet and Buick nameplates starting at less than $30,000. A commercial van co-developed with Hyundai is the only new EV GM plans to release through 2030, although it remains the number 2 EV seller in the U.S. GM is expected to release hybrid or plug-in hybrid variants of many full-size pickups and SUVs in the coming years. Volvo Cars has reshaped its U.S. portfolio into an all-crossover lineup over the last year and is now weighing a return to mid-size cars with a pair of electric models. A person briefed on the discussions told Automotive News that Volvo is studying a sedan and station wagon that could arrive in U.S. showrooms in 2028. The 2 electric vehicles would carry the familiar 60 or 70 series badging, and a rugged cross-country variant of the wagon is also possible. The pair are likely to start in the low 50,000s and would potentially generate incremental volume of only about 10,000 sales combined annually. Volvo is considering the idea while also planning to expand at the higher volume end of its U.S. lineup. And those are today's headlines. You can find more details on all those stories at autonews.com. Joining me now to talk more about GM betting on a diverse lineup is our own John Irwin. John, welcome back to Daily Drive.
Thanks for having me on.
All right, John. So GM has leaned heavily into trucks and SUVs for years, but now it's planning new Chevrolet and Buick sedans. What's driving the shift, and how does it fit into the company's strategy for the rest of the decade?
Yeah, it's an interesting move. Like you said, GM, in recent years, over the past couple of years, after it got rid of the Malibu and the Camaro, kind of sort of like it's Ford and Stellantis, it's really leaned heavily into, where the market's been, which has been in pickups, SUVs, crossovers, which also happen to be GM's most profitable models. But because of kind of a couple shifts going on in the marketplace, GM is looking to introduce a couple new sedans in the coming years. It's kind of 2 things happening at once. First, sort of the drawback in EV plans and EV production, which has left some of its plants, with different plans than maybe GM was expecting a few years ago. Whereas, maybe at some of their plants, they were expecting to build EV models. If those plans got pushed back or moved around, all of a sudden there's extra capacity. And then on top of that, I think there has been a little bit, not just GM, but some automakers have seen maybe slight movement a little bit back towards sedans. It's not a huge movement. It's not a huge market swing back towards sedans by any stretch, but it does appear that there is a sizable market, for sedans right now, even as, the market is still very heavily tilted toward trucks and crossovers and SUVs. I think there's I think GM is sort of spotting that, hey, we can maybe capture a slice of the market that we're just not in right now, and we can compete. These new Buick and Chevy sedans. I don't think we're expecting anything huge in terms of annual sales volumes or anything like that. But if you can sell, a good amount yearly, keep those plants running, and capture a slice of the market that you haven't been in the past couple of years. I think GM is thinking like, okay, we can do that. That'll help us to, maintain our sales momentum, especially as affordability concerns continue to rise. Obviously, a lot of these trucks and SUVs tend to be on the more expensive end of the market. If those concerns persist, this will give GM another offering on top of the ones that they already have that are sub 30,000. These might be maybe a more affordable option for someone. Even the Buick sedan, obviously, that wouldn't be a quote unquote affordable vehicle per se, but it might be less expensive than maybe a crossover that someone might be looking at. So yeah, I think GM is sort of seeing a couple trends in the marketplace, and they're seeing a little bit of an opening here. It's not, I think, a full scale reinvention of their strategy per se, but it is a tweak to it for sure. That it'll be interesting to see how that pays off later this decade.
Now, at the same time, GM is slowing the pace of new EV launches while expanding its hybrid lineup. What does that tell us about how the automaker sees consumer demand evolving over the next several years?
Yeah, obviously we've seen GM kind of pushing back a lot of its EV targets. Obviously just considering over the past couple of years, the EV sales not getting to the point where GM and other automakers were expecting by this point, and obviously with the end of the federal EV incentives, the marketplace for EVs just isn't going to be where it was. So we've seen GM sort of, they're not backing out of the EV market by any stretch. They're still the number 2 seller of EVs in the US. They want to maintain that. Other than the Bolt EV, which will go away next year, GM is, going to keep its EV lineup and continue to sell EVs throughout its brands. But obviously, the sales won't be where they expected them to be. So as part of that, GM is kind of seeing where the market is going, and we saw this with sales numbers in the second quarter. Hybrids did really well, and brands that sold hybrid models had pretty good quarters. GM, its sales were down a little bit year over year. It was coming off of a strong quarter a year earlier. It wasn't necessarily a bad quarter by GM for any stretch of the imagination, but it did sort of stand out, especially considering GM right now only has one hybrid model, and that's the Corvette. Other than that, no hybrids. GM, though, has said that they're working on them, especially plug-in hybrids. Mary Barra earlier this year, reaffirming that these are going to be on the way, starting next year. This is an area where it's still a little bit murky exactly which models are going to get hybrids. A lot of people expect the new Silverado and Sierra redesigns to come out later this year. A lot of people are expecting those to have hybrid options. They don't, at least they won't off the bat. We'll see if later down the line if they do. But GM is, especially in the plug-in hybrid front, but even some other hybrid powertrains, we could potentially see that moving forward. And again, it seems like that's where a lot of consumer demand it's growing there, right now, and I think that's kind of being reflected in sales numbers. And again, GM wants to be there. It's not, again, a full scale reimagining of its strategy, but they are kind of tweaking it as things change in the market.
Perfect. John Irwin, always insightful. Thank you so much for joining me.
Thanks so much.
Infiniti just launched the QX65 and is seeing it take off past initial internal estimates. It joins the QX60 on the showroom floor. Infiniti hopes a balance between the two products will meet consumer demands. Eric Ledieu is Vice President of Infiniti Americas. He sat down with our own Urvash Kakaria. Here's a piece of that conversation.
All systems go, and we started shipping on the morning of the 12th, or the afternoon of the 12th.
What's the early customer and dealer reaction?
Very, very positive. We have seen, matter of fact, even the first full month of sales, which is the month of June, exceeded our own internal expectations. So the car is turning extremely quickly, very favorable. The retailers really appreciated the simplicity of the lineup. Easy to order, easy to stock, easy to promote. As you know, right? When we took everyone through the strategy is we start with this well-equipped Lux, we move you up to Sport, and then if you want everything, you got Autograph. In the meantime, standard all-wheel drive, standard panoramic roof, standard Google automotive automotive services. So all those things that you would want in a vehicle are there. And then it's just a matter of budget and desires in terms of equipment.
So I remember that when we did the QX65, pre-launch story,
Yeah.
I guess the goal was going to be 1,500 to 1,800 units a month, but that was longer term, right?
Yes.
Not in the first month.
Sure.
Yeah.
So yeah, what the strategy for this vehicle, probably unlike some of our past launches, is we haven't gone to say, turn the light switch on and boom, here they all are, and we want to sell. Whether it's 1,500, 2,000, whatever the number is, we are gradually ramping up to that number over 6 months.
Okay.
That's kind of our strategy. And then the other thing is really this marriage between 60 and 65 and understanding how those two are going to live together in the showroom. The beautiful part is that they're literally built in the same line.
Right.
So if all of a sudden we say we want to be 60-40 one way and it ends up being 40-60, so be it. Then we flex in and out and we're able to use Smyrna's capacity to be able to meet the consumer's demands.
So that's a good segue in terms of, so now that you're starting to see QX65 sales, it's supposed to be a conquest vehicle. Is that proving to be the case?
It's
still early.
Yeah, as it's way too early to say whether it's proving anything.
Yeah.
We've seen a fairly good balance between conquest and loyalty early on.
What's that?
Right now it's 50-50.
Okay.
I think long term it ends up being more conquest than loyalty.
Right. So
right now it's 50-50
Okay.
in the very early stages, which makes sense, right? Early adoption from some of our very best customers. And the ones who are coming back to us within the brand are coming from 50, 55, 60.
Right.
So all of the models into 65. Which is great, especially for our QX50 and our QX55 customers, for them to have something to go to. So that's super encouraging. And then from the competition, we really see a little bit of everything.
Okay. What are the most popular brands?
Well, the most popular brands would be your volume vehicles. So we see Lexus, we see BMW, some of the volume leaders in luxury.
Okay.
Especially this early on in the selling days, because they're they do quite a bit of volume. There's obviously quite a bit of them out there.
Any surprising brands? Any surprises?
You're
not taking anyone from the mainstream.
Yeah, so the one that and this is just data, right? But the one that always pops is F-150. It's like, okay, well, is it really is it an F-150 buyer that's moving to QX65, or are they actually just adding this to their driveway, right?
Right.
It's likely the second one, but because F-Series sells so many vehicles in the country, they tend to pop always, especially in early data. But I think over time we'll see most of it being a mix between some move ups, some move overs from competition, then of course our own loyal base.
So you're saying that the conquest to Infiniti loyalists is about 50-50. I talked to a few dealers. It's slightly more skewed towards repeat customers. How do you increase the ratio towards more conquest?
Yeah,
what are you planning to do?
Yeah, so if you think about it, we started shipping on May 12th.
Yeah.
We also started advertising on May 12th.
Okay.
Right. So we have a very consistent approach to our marketing, and QX65 launch advertising. Really, we're 45 days, 48 days into it. We did a lot of upstream things, between PR, earned media, digital and all that, but a full blown launch, which for us is going to be every bit of 6 months, that continues to build. So we see our demand activities increasing online, what we call key buying actions. All the investment we make in the launch marketing just builds on itself. So we're still building that. Leads are growing, demand is growing, shopping activity is growing on the vehicle. So that's how you continue to create awareness. And in the meantime, every car you sell is also I always say cars sometimes are a rolling billboard on four wheels. Right.
Exactly.
Every time you sell one,
butts and seats.
What is that?
Yeah.
What is that?
What is the planned ratio? What is the ratio you're aiming for, let's say by the end of the year? Or let's just say a year from May 12th. Or let's just say next May, end of next May. Where would you like that ratio to be? If it's
you mean conquest versus?
Yes,
yeah.
If it's 50-50.
I see this vehicle being probably 60% conquest, 40% low.
Okay.
Yeah.
Okay, so not much more to go.
No, not much more to go. And part of that, Urvash, is really driven by the fact of where the vehicle sits.
Yeah.
Not only does it sit in terms of its packaging, its size, what it does, where it meets the consumer's needs, but also the segments that our consumers are coming out of.
Right.
right? So if you think about what we've sold over the last, let's just say 5 years, a Q50 sedan,
Right.
does that customer necessarily want an SUV? Maybe, maybe not. We'll try and obviously make that available. So because of where we were in segments,
Yeah.
and even Q50 and Q55,
Right.
QX50 and QX55, very different, packaging,
Right.
pricing strategy, size. So we know we have lots to work to do on Conquest because of where this vehicle sits versus our previous lineup, if that makes sense.
So it's meeting people that would have previously bought a QX55 or a QX50, or more likely a QX60.
I think all the above.
Okay.
All the above. I think there are plenty.
What is the niche that it's meeting?
Well, there's no niche here.
Right.
There's no niche here because of the size of the market.
Right.
43% of the buyers are in this mid-size premium
Got it.
luxury SUV segment. Right. So there, yeah.
Yeah, but you've also got the QX60 there.
Yeah, you do.
Yeah.
But we see that as a very different buyer, right? I would say QX65 meets an early or late empty nester.
Okay.
Right. Someone who wants to reward themselves with everything that the QX65 offers. And then I would say that the QX60 meets those stages of life in between.
Okay.
Where you have the need for third row, you have family, you have more active lifestyle in terms of putting more passengers in the vehicle. So we see 65 really meeting you either when you've graduated from that phase in life or before you've entered that phase of life.
So in terms of volume, you see QX60 still being the number one volume, and then QX65
we do
as the second.
We do. And as I mentioned, the good thing is that's what we see today. And if we wake up someday and realize it's 50-50 or it skews a little bit the other way, then
you can easily scale the production.
We absolutely can.
Are you seeing cannibalization right now of QX60 customers, or no, nothing at all?
No.
So there are no trading in their QX60s for a QX65.
Well, they would be a source of sales.
Considering shopping.
I shouldn't say we're not seeing any. There's no way you can't have any cannibalization in any showroom.
Yeah.
Right. It doesn't matter whether you have 3 vehicles or you have 30 vehicles. You're going to have some interplay with some of your vehicles. So I shouldn't say there's none. But we don't see that as being a long-term issue, if that's what you're asking.
Got it. And you're not planning for it or anything?
No.
Yeah, okay.
No.
And in terms of flexing production, can you talk a little about that? How easy is it for you to flex production?
Yeah, it's even easier because if you think about this year for us, Infiniti's at least planned volumes, roughly 75% of our business is going to be built in the United States.
Okay, for Infiniti? Good. I didn't know that.
Right, yeah.
Okay.
So if you think about that, then for us, it also improves our lead times on what we need to tell manufacturing in terms of commodities, in terms of mix, in terms of powertrains, everything. And so what that does, when we order a QX80, for example, it takes us a little bit more time because we have to, the lead times crossing the ocean. So when we're making that decision, we might be making that decision 4 or 5 months out. Whereas it comes to QX65 and QX60, we might be shortening that time by 2 months because we're able to tell the plant. So this month, right now, we're making decisions around probably September, October production.
Okay.
Right.
Moving on, overall retail sales down 3.7% first half of the year. How do you recover in the second half?
So,
what's the plan?
Well, so the plan is what we just talked about.
QX65.
Right. So what we want to do is maintain our momentum on QX60 and QX80.
Okay.
And then layer on top of that the extra volume that comes from QX65.
And you're confident that'll be enough to get you to that 20% target of growth that you have now?
Yeah, our growth target for the entire fiscal year is 24%.
Oh, it is now 24.
24%. I think that's what we shared even at the QX65 event.
Okay.
Right. So call it, 20 to 25%, somewhere in that range. So that's your number is absolutely accurate, and we see that very much being possible with the plans that we have. So, QX80, as a matter of fact, QX80 just had its
we want to come to it.
Our record quarter this past our Q1 calendar year Q2, and so we need to continue to ride that momentum and continue to have that vehicle deliver the results that it's delivering. Consumers are clearly responding well to it, so that's the base. We continue the QX60 volume, and then you layer on top of that the QX65.
So all the incremental volume will come from QX65?
I would say 80 to 90% of the incremental volume will come from QX65.
That's Daily Drive for today. Thanks to Francis Clem, as well as our own John Irwin and Urvash Kakaria for their reporting for today's podcast. You can get the latest news on USMCA, General Motors and Volvo, and everything happening in the auto industry at autonews.com. We'd love to hear from you. Let us know what you think of the show and the topics we covered today. Send us an email at dailydrive@autonews.com or leave us a voicemail at 313-444-2774. And if you enjoy the podcast, remember to like, leave a review, and subscribe so you never miss an episode.